Hey guys, just want to go over the market review for you for today, 12/9/21, and we'll start where we usually start and taking a look at the S&P 500 futures here. They did just like I thought they would, going into CPI tomorrow. What that is, Consumer Price Index, basically a gauge of inflation and kind of leads to where the economy might be going, if there's still too much. And this one's extra important because it's going to determine if, or possibly determine if they're going to start tapering faster or raise interest rates faster. But I don't think it'll really change anything. I think he's already set that he will reduce his or increase his tapering. And what that is actually stop buying government bonds, treasury bills, bonds, and which is supporting the economy. The economy at this point doesn't need any support. It's going hot as it is. So by him tapering, which means stop slowing down on the buying of bonds, then the economy starts to stand on its own two legs, and that's a good thing. So anyways, back to our S&P 500 futures. We are turning around here. The teal line here is the all-time high. So you can see it just came right up, and it's chopping around, and that's fine. Today, I did pull back some going into tomorrow's number. I would expect we open up down tomorrow, and then depending on how the number comes out, we may bounce back up, and we could rally hard. Or we could come down, and I don't think we'd really come down too hard. There's just too much buying going on right now. And so we may chug around, or we may just fly on through. Who knows? We'll have to wait and see. So anyway, this is just like I thought it would happen. Let's take a look at NQ. NQ did give back today as well. But you can see it's bouncing off the high as well here. So, I mean, the near high. This one broke through for 2 days and came back, and it's been sitting on this, for 3 weeks here. So we're still looking okay. We're looking great right here. It's a great little setup, and as long as it keeps doing this, the market stays cool, and then so it's ready to take off. There's no hesitation. So let's start jumping into our 3 stocks. Actually, I'm going to do 4 today, and a review of one other one that I should have gave you, but I opted not to a few days ago. So let's start off with Visa. Visa, great company, obviously. It's been beaten down and being challenged by companies like Affirm and whatnot that you can buy now, pay later kind of a thing. But this one, it's doing all right. It's starting to make a nice comeback now. Hopefully it'll make it past. If I can get past this, then we'll be looking really good. This 220, maybe a 215, 220 area. But it's doing everything. But we got a lot of volume coming in. TTM looks good. RSI looks good. It's got the 270 price target on it, so that's way up here for a new high. Eventually, that's like maybe a 1 year out kind of a thing is what these analysts put on. So our upside downside ratio is 4.4. And so that's good. Technicals aren't the greatest, but they're still okay. I mean, they don't mind here. Obviously, it's gone up from 190 to 211, so 10% move there. So this one will look okay. If we can really get past this, then we'll be in great shape. Let's just call it right here. What you want to do is cut across the most bars you can to give you your breakout area. So we're right there now in my book. If we can get through, and then we're going to hit that 220 in no time, and then next stop would be at the 230. So this is one worth looking at. Let's move on to our next one, which is going to be Capital One Financial. Capital One's one I've been watching for a long time, and it just has not come through. I wish it would get going here a little bit. It just keeps selling down, but the numbers are great. Everything looks fantastic for this thing. But now we're at the point now. I held off on this one a few days ago because it just wasn't getting up here to the resistance. So now we are past it, and at the end of the day, when the market sold down, it came right back down to that trend line. So hopefully tomorrow it will push on through. Now again, this is a credit cards and whatnot. So what happens with credit cards? Interest rate, right? And where's interest rates going? Up. So chances are these guys are going to recover just fine. It's just can't get out of its way right now. Volume is not quite where I want it to see. So this is one, if you see it breaking out, I would just jump on it at 151 or something. Anything over that with volume. Everything else here looks good. But if it's got volume, 151, and then it's going to hit 157, and here's your next stop, 160, and then somewhere up here, 65, and then to the highs. Okay, so you can kind of see how this one would play out as long as it can break through. The overall trend you can see here by these SD lines is definitely going up. So we're fighting the current now on the way down, but it's going to jump back in the water here in a little bit and start swimming up again. All right, let's go to the next one. This one here I haven't traded for a long time, but I took a trade on it today. I started a position, definitely not a full position. And that's URI, United Rentals. Let's go to here, United Rentals. This one here, this can be a little volatile during the day, but if you're not a day trader, which I try not to be, try to just be swing trading. I don't take too many intraday trades. But this guy here, he will move. This guy moves up great. I did trade this one before, but I haven't done it for a year at least. But it has the volume. It had a nice move today. This is starting to come back here. It's got a 420 target on it, so it's for way up here. Our upside, ratio is 4.7, so that's great. I don't know how much more I can say other than, it looks like the usual chart, doesn't it? If this pink line, this 10-day can move across this 50, it's going to take off, right? Because that's, again, a golden cross. And then we got our middle SD line right here. So boom, and then to the races. Okay, let's go to our next one. Move on through these. Lockheed, didn't come out. There. Lockheed Martin, next on the list. And so you can see this guy's here been chugging around, bit it bad on earnings back here, but it seems to be doing okay. Volume's doing great, better than it was back here even. And so the volume is really starting to push up a little bit here. You can kind of see it's what was it back here? 1.2 million. So we're at 1.6 million here now. So it improved like 300,000 shares a day. But our TTM is just starting to come up again in the light blue. So that's a good thing. RSI head in the right direction. It's the same old kind of chart, right? It's the same old thing. Volume, TTM, RSI, everything's moving in the right direction. You can find these every day. Every day. If you just look, or you have scans that are going on and you can find them that way, you'll hear names thrown out there all day, but does it fit what you're looking for? Not always, but this guy, the only thing I don't like about this one is all the topping tails here. It doesn't normally finish strong. That's what you want to see, is a finish with no tail on top. That's great. That means it's really going to advance. But this guy here, a $400 target, so it's way up here for its target. Do we even go back that far? Yeah, so 396, right about its high, is where it came from. So, and then remember, when you look at charts, just remember this line. I've heard this 20 years ago. You look left and trade right. Where did it come from and where's it going to? Right? Chances are it's going to start heading back to that 400 level. If nothing really changed with the individual company you're looking at, then there's no reason why it wouldn't get back to that. Maybe they issued a bunch of more shares or something like that, but I don't think Lockheed Martin has done that. They've been solid. And of course, a lot of their stuff is with the government. So, the government's not going anywhere. They're going to keep buying planes and whatever equipment they need off of them. So here we are with our 5.3 upside downside. In this case, the PE is still good. So there's a little room for upside. If you just look at the PE, there's room for upside there. So that just supports the price movement. So I'm thinking this, in these times you always want to wait for the breakout. I think after this CPI number, settles out tomorrow morning, come Monday, it's going to be the Christmas run, I think, coming into next week. And so this would be one you just definitely want to have on your watch list, or just take a small position in it just so you can catch it. If you want to just jump into it, make sure you set a stop down here. So, whatever your chart tells you, set your stop. I got my stops at 340 and then 333 are my two stops. So, right below the bar today, because it was a nice big bar, and then come down to 333 where these two bars are. So that's where my stops are. So you can go there. Okay, so the one I didn't give you, I chose to give you Target the other day. It was looking good, and it at the time, Target has since kind of rolled down, just kept going down. It was a few days ago here. So I was going to give it to you right in here, and then since it's just rolled over. Don't know why. Never know why. It just happens that way. So we just wait on that one. It's going to do great. So the one I didn't give you was CVS. Now CVS today, because CVS was starting to head down at that time, and then it actually just turned up and has taken off. Today was an investor day or an analyst day, and they gave out upbeat guidance for next year, and upbeat just everything about the stores. The whole company. So it just took off. It was up 4% today on a day that was down, whatever, a couple hundred points, or 224 S&P points or so. Anyway, so it took off. It's over this high here, so there's nothing to stop it now, except the price targets are not being raised on it. It's still just the 115 or so. So it's really 15% of upside. Not bad, but we'll see. If we look at the chart for, I just charted it again. I gave it a 110 target. So it gives it a 13% upside or so, but it's only a 2.4 to 1 right now, upside downside ratio. So that's not great. And so if you get a dip tomorrow, man, maybe you want to jump into this thing, because it's bound to give back a little bit tomorrow after being at $4 today. So there'll be some profit taking most likely, and then of course people are going to want to jump back in again. So on my thing, it says if to get to 3 to 1, we need to go to 96.50. So even if it drops 80 cents, big deal, 80 cents. Gets to 96.50, you're sitting about support, man, just jump on in. Change these numbers to whatever you're comfortable with your trades, and whatever shares it tells you, you could buy this thing. CVS is going nowhere. So one of the things I wanted to talk to you guys about was a lot of these share prices. this one's really inexpensive, right? But then you got Lockheed Martin, 343. If we ever, get to Costco, who had earnings today, $524. If you have a smaller account, this is crazy difficult to trade these, because you're like, I can only get 2 shares. I can get 10 shares. Great, whatever. Just remember, it's not the dollar amount. It's the percentage gain that you get. So it's like, do I have 100 shares of Amazon? No. Do I have Amazon? Yeah, I got a few shares of Amazon, but I don't have 100 shares of Amazon at, $3,400 a share. So, like even on here, in a $10,000 account, if you can, or per trade, $10,000, again, change it to whatever you want. This is telling me you get 56 shares of CVS. Okay, that's a $97 stock. I want to spend, $4,000 on it. 56 shares times 97, right? So, just go with whatever you set up. This is totally, whatever you want it to be, right? It's just going to give you the number of shares, and it's going to tell you, just put your support levels in there. If you put in a $300 max loss, it'll tell you, hey, this is the amount of shares you need to get. And as long as you stop out at that first or the second stop, this is based on the second stop, then you're going to be fine. Now, do you have to let it go to that second stop? No. If it's going against you like Target has, if you bought Target the other day and it keeps going down, I would have been stopped out right here at 242. Am I going to let it ride down to 237 or even 226? No, I'm not going to do that. I don't let things ride down and just wait from the bottom. And, I could buy more, dollar cost average down. No, I'll just take, I'll take a loss. Your best loss is your fastest loss. Your first one you take. Just take it. Be done with it. You're not going to win every trade. So if it's going against you, get out. Just cut the losses and be done with it. Put the money back to work in something that is growing. This may have been up here, right? And go from 251 all the way down to 227. It could do that again. Do you want to lose $24 a share? Not me. I'll wait till it comes in and gives me the signal again, right? The squeeze. I'll wait. It'll come back. I'm not worried about it. But anyway, that's about it for tonight. We'll look in for tomorrow after the CPI is bound to be a little volatile. And we'll go from there. I'll do a recap this weekend, but make sure you go back and look at the stocks from a few days ago. I mean, some of these are really starting to do good. Disney did well again today on a down day. Well, it ended up down 40 cents, but that was a sell-off at the end, I think. But still kind of held its own pretty good. I mean, 40 cents is nothing. But you keep reviewing all those old stocks. I mean, they're never really old, right? It's only a couple days since I've posted them. All right, guys, we take it easy, and I will talk to you tomorrow.